Global central banks have always been vassals for the higher orders. They operate as a corporation with the purpose of manipulating the currency as directed. While each country may use a different currency, the US dollar has the advantage of being the world's reserve currency for the most part. Previously, Britain had the hegemony in this monetary system, but the US empire claimed this status many years ago. More recently, many high-level people in the financial system have repeatedly called for a replacement of the US dollar to more accurately reflect the new world order which is emerging. You came here for the truth, so let me unveil that for you. Today we're going to talk about a few issues. I wanted to start with what Mark Carney had suggested in an interview as well as a statement that he made. I'm then going to connect that in to what the central banks are currently doing. Then that will bring us into the final topic, which is of course between the US and China. The tariff issue is certainly unfolding. I just did a video yesterday giving you the breakdown of what had happened specifically, but I want to tie that all in together in this video, so let's begin. Like I said, there was a statement and there was an interview. This is the first statement he made, part of it anyway. A digital currency could dampen the domineering influence of the US dollar on global trade. If the share of trade invoiced in a digital currency were to rise, shocks in the US would have less potent spillovers throughout exchange rates, and trade would become less synchronized across countries. The dollar's influence on global financial conditions could similarly decline if a financial architecture developed around the new digital currency, and it displaced the dollar's dominance in credit markets by reducing the influence of the US on the global financial cycle. This would help reduce the volatility of capital flows to emerging market economies. They are talking about a new world order that has emerged, and we look at everything that's going on in the financial system today, the maximum volatility, but the fact that the United States has control largely over everything that happens. If they don't want a country to do well, they simply constrict it, and that's what they have been doing all along. Now, they've had some challenges with Europe, for example. Oh, you want to do business with that country there? Well, we're going to put sanctions on you. We don't like that particular country. We're going to tell you what to do because we set up that system. Now, these alternate systems are being developed, and we see that going on in Europe. We see Asia. There are a series of events that have been taking place. I've been covering them here on this channel. Now, I think it's interesting that they are talking about these particular type of currencies because this is a completely new ball game. The central banks have started to look into this. However, they are way behind. Initially, when these things started coming out, the central bankers and the governments around the world started to suggest these things needed to be shut down. As soon as Facebook came out there and said, we're going to develop our own, all of a sudden you saw left, right, and center that everybody wanted to adopt it. I mean, it's crazy the way that things changed based on this, but I think everyone should keep an eye on it. The Chinese currency, the renminbi, has been cited as an alternative to the dollar, along with the proposed digital currencies such as Facebook's Libra. And last but not least, Carney said that new technologies could allow for a global digital currency to challenge the US currency. Now, there's more to this in here, and I think people should understand what is happening, but I don't have enough time to get into all the details. I will connect that in with this. It's the interview that I was talking about, and here is his quote. The dollar is the global currency, we know that. The challenge is that the US share of the global economy has been reducing. The dollar share of payments, not just financial assets, but payments. A lot of payments of countries that have nothing to do with the US make payments in dollars. And what happens in situations like we're in tonight, where the US, to its credit, is relatively strong, doing better, the Fed has been been doing the right thing. They have adjusted policy, they have tightened policy as it was strengthening. Now they're doing the right thing, but they adjust it and it is relatively strong. That means the rest of the world policy is tighter than it needs to be, and that feeds back on the US economy in a way that ultimately slows this economy. This is interesting, by the way, as he looks into the data and the events that are unfolding. Of course, he's a central banker, so he's going to say certain things, but we can take little pieces from it, and I do think it is wise to follow what they say, but as always, take it with a grain of salt. So further along in here, he starts to clarify exactly what he means. And essentially, it's that the US has too much influence over the global financial system while things have really changed. And he's not suggesting that the United States should just give up its power or something. The point is very clear, and I've made this before. If China and Russia are doing a deal together, why should the US dollar stand in between them? Why should the US financial system stand in between them? Why do they have to transact in between each other in a way that I like to think of it, an analogy being a highway or a road, and that is built by the United States? Of course, that doesn't make any sense. So now they're trying to get around that, and you see a country like China engaging in currency swaps with countless countries around the world, things that continuously add up. They're getting bigger, they're signing new agreements, it is expanding on a global scale. So things have certainly changed, there is no doubt about it. The People's Bank of China is, quote, close to issuing its own digital currency, according to a senior official. So this is official documentation that is coming out here, and I think it's interesting because previously they said this thing is crazy, this thing is ridiculous, and now they're jumping on. Of course, this would allow them to be more in control of the situation, and I do believe that's what it's all about. Then we take it a step further because we're looking at all of these currency swaps. We are looking at a big change in direction from the way things were, let's say, 20 years ago. This is just a piece of that. Turkey got a $1 billion foreign cash boost from China in June. China is trying to reign supreme, and they are doing so and pulling out all the stops. You can see what they are doing, their actions globally, partnering up with countries all around the world and building infrastructure in different places, spending billions and billions and billions of dollars everywhere from South America to Africa and all over the place. So definitely watch what they're doing, not necessarily just the back and forth you're getting in the news about the whole tariff issue. No. We got to look at actually what they're building, where they are investing. Then I wanted to touch on these two articles. Central banks don't tell it like it is. They want wiggle room. They're planning to cut, but at the last moment they may decide, no, we shouldn't cut. Also, they want a little bit of ambiguity just so the market can react in its own way. And this is what we get all the time. You hear Jerome Powell talking about the same repeated points over and over again. It's funny because you know exactly what they're going to say before the meeting even happens. And that brings me into my next point, which is that they purposely use their statements, their forward guidance, as the Federal Reserve likes to call it, in order to manipulate the financial system without actually taking action. Now you have to see what happened in India. This is crazy. Okay, so check this out. As India's economic climate becomes more complicated, so have the messages from monetary policy makers. Okay, so hear me out. The Reserve Bank of India watchers were left scrambling this week over their dictionaries and Google searches to decipher parts of the speech by the governor of India's central bank. Look at this. Estimates of economic growth in India have unfortunately been subject to a fair degree of, let me try and pronounce this word, okay? Floccinaucinihilification. I'm not joking if you're just listening and you can't see this, what I have in front of me. Let me try that again. Floccinaucinihilification. I don't know what kind of word that is, but apparently, according to the Oxford Dictionary, this word is rare and it's originating in the 18th century to describe the action of estimating something as worthless. No, that word is worthless. And that's what the central banks do. They are constantly trying to cover up everything that they do. They are always engaging in something behind the scenes. They're always talking about their, quote, independence. At the same time, they say they're being transparent. Do not believe the lies, my goodness. As recession concerns mount, dozens of central banks are cutting rates. More than 30 central banks around the world have cut interest rates this year. We're talking about a year when supposedly everything is fine, and yet we are seeing 30 central banks around the world cutting rates. Now, this right here out of the New York Times just gives you a chart to give you an idea of the activities of these central banks on a very basic level, of course, and you could see here for yourself. Whether we're looking at China, Japan, Euro, Britain, Canada, they are either increasing or decreasing, but it looks like the majority of central banks around the world have decreased their interest rates, particularly as we head into the second half of 2019. We're going to see more of that. These central banks are acting together in concert to make sure that their game plan remains in line and on pace. Two things really quickly before we finish the video. We are looking at what's happening with the tariffs, with the trade issues, and apparently it looks like consumers are paying more. Tariff hike hits everyone from beer brewers to book publishers. The trade issues between the US and China started more than a year ago, but past rounds of duties have mostly impacted parts and components that are not obvious to the average consumer. Small and medium-sized businesses are scrambling to make plans, from delaying store openings to implementing hiring freezes to even considering price increases. This, of course, will unfold in the coming weeks and months. You don't have to wait long for the effects right here, and of course, I will be outlining that in a future video. This one was interesting because apparently even monkeys are increasing in price. Researchers who use laboratory monkeys to study human diseases are worried about these new tariffs. So apparently 80% of all these primates used in scientific research in the US are coming from China. So that's going to put a damper on this apparently. I just thought it was an interesting piece of data, so I wanted to bring that to you. I'm going to end the video there. If you found it informative, definitely hit that thumbs up button. You got to support this channel, and all you got to do is click one button. So I really do want to thank you for that. If you want to build a business, if you want to make money, if you want a passive income strategy that seems confusing, seems convoluted, and most people would never be able to do it without some help, I created a free e-course to do just that. I call it the Amazon GPS. It's available at theamazongps.com. It gives you all the steps that you need in order to sell on Amazon, to make a business out of it. I'm not talking about selling random products you find in your house. I'm talking about an actual business, and I do believe that this will become the biggest Amazon course on the internet, and it looks like it's on pace to do that in a relatively short period of time. Check it out at theamazongps.com. There's a link in the description. If you want the financial education you were not taught in school, these two books have everything you need. All the details are located at the link in the description. We're talking about making money, foundation, history, the asset class, reducing your debt, and everything you need to know. Check it out. If you want the audiobook for that, it's available at themoneygps.com. Hang on, hold on, don't go anywhere. If you have not seen this video, then definitely click on it, and I will see you over there.